These third quarter numbers were extremely soft, so we're seeing growth going backwards once again. We saw sales down by 2.2% and on a like-for-like basis are down even more. That compares to the second quarter where we saw both numbers down by 1.4%. And it is the heavy discounting that we are seeing because of the warmer weather. I don't know if you can see what I'm wearing, Carson, but I'm still in a summer dress. It's been very warm, the sun's outside. And not only is this having an impact on apparel retailers, and we knew that the warmer weather was having an impact because of Wesfarmers warning coming out from Target, but it now looks like it's having an impact on other retailers as well. And if you have a look at the shopping centres at the moment, it's not just the clothing retailers which are heavily discounting, but we're also seeing other retailers are heavily discounting as well. So it implies that there is an impact on foot traffic going through the centres at the moment and on retailing in general. And of course, this has been a very difficult space throughout the last week. Ever since we did see that profit warning come out from Target, we have seen the retailers coming under pressure. Myer's down 9% in the past week, not including the move to the downside that we'll probably see today. David Jones is down about 7%. We're even seeing stocks like Harvey Norman and JB Hi-Fi losing around about 6 to 7% in the past week. And this week is going to be a big one for retailers. We've heard from David Jones today. On Wednesday, we'll also have the Wesfarmers strategy briefing, so no doubt that the market's going to be listening in to see if we get any more clues on the retailing environment. And we also see the Westfield annual general meeting as well. So a big week for retailing. Unfortunately, not off to a good start with these third quarter David Jones numbers coming out. The other part of the equation, of course, is margins. In the first half result, David Jones was actually seeing an increase in gross margins, but of course with the heavy discounting, which is now expected to continue, I'd expect that margins would also be impacted here.
Therefore, the newspaper side of the business, what do you make now of this write-down story that's doing the rounds?
Well, talking about the impact of the Aussie dollar, this is one stock which has had a positive impact. In fact, News Corp shares up by a massive 70% over the last 52 weeks. And that compares to other blue chips on the Australian market, stocks like CBA, Telstra, which are up by around about 40%, and the Aussie market, which is up by 25%. But of course, if we have a look at News Corp, the next thing on the radar for shareholders is this split between its entertainment and its publishing unit. Now, if we have a look at the entertainment unit, this is actually about 75% of operating profit. The publishing unit is a lot less. It's more around the 20% mark. However, this is where a lot of the trouble has been. We know that advertising revenue has absolutely plummeted over the last few years, and we know the structural challenges which are in newspapers at the moment as well. So coming close to this split, one of the things that News Corp has come out to say is that there's likely to be a write-down in the order of up to $1.4 billion. Now, this is mostly due to the Australian publishing assets. We know that in the last quarter, the publishing assets actually saw operating profit down by around about 35%, and the goodwill associated with the Australian publishing business is probably around the $1.5 billion mark. So a lot of that is going to have to be written off before this split happens. So it does look like this split very much in focus. News Corp is one stock which has really benefited from the reduction in the Aussie dollar that we've seen. The stock's done extremely well. However, I guess now just preparing for that split, which is expected on the 28th of June.